It's been an unnerving week for U.S. financial markets. First, the massive federal bailout of mortgage lending giants Fannie Mae and Freddie Mac. And now the potential collapse of Lehman Brothers, once the fourth largest investment firm in the U.S. Fortune magazine editor Andy Serwer.
It's a sad turn of events because, Lehman Brothers, an institution, it's 157 years old, and here we are, they are on the brink.
Analysts say the bank's future is in doubt after it reported a loss of nearly $4 billion in the last quarter. Lehman Brothers has suffered heavy losses as a result of the U.S. housing slump, and it's not alone. Washington Mutual fired its CEO after shares in the Seattle-based bank lost nearly half their value this week. Business Week editor Adrian Carter says financial markets are on edge.
Right now there's a crisis of confidence going on with both Lehman and Washington Mutual, and the question right now is whether they have the money to stay in business. The other question is whether the federal government steps in.
The U.S. Treasury Department and the Federal Reserve are said to be working closely with Lehman Brothers to find a buyer. But analysts say it's unlikely the central bank will guarantee Lehman's assets, especially so soon after bailing out Fannie Mae and Freddie Mac. Forbes magazine editor Jack Gage says without the Fed's backing, potential investors could shy away.
The lowest hanging fruit has fallen off of the tree now that Lehman Brothers appears to be on the cusp of a conclusion to what's been a very trying period for the company. The Fannie-Freddie news that the government has stepped in and explicitly guaranteed and taken over its operations was a relief to the market. This has rattled it some because it was so unexpected.
A new report on the mortgage crisis does little to ease investor concerns. A firm that tracks real estate trends in the U.S. says the number of foreclosures is up 27% from a year ago. Arcega, VOA News.